Ladies and gentlemen, welcome back to another episode of our Thrive in China Roundtable. It is actually Golden Week in China. It's the national holidays, but we're still thriving on with our roundtables as usual. Before we start today's roundtable, I do again want to ask my newcomers into the community. Who are you? Where are you from? And what stage of your China journey are you in? Are you a newbie to China? Are you a startup in China? Are you an experienced China hand? Add that into the chat box, or if you're watching this on replay, don't hesitate to reach out to me and let me know and give me a little bit of background about who you are. A little bit about myself, again, for those newcomers. My name is Christina Kohler-Colucci. I'm the head of business advisory at Woodburn Accountants and Advisors. I'm a leading expert on inbound investment into China. I've been doing this for the last 20 years, specifically in the administrative realm, looking at corporate services and corporate compliance in China. I've worked with over 750 international companies across industries, sectors, on their market entry strategies, on their implementation of their business models, whether they set up or they don't set up in China or Hong Kong, as well as then their growth and their scaling in the market. In terms of the services that we offer, it's really everything from incorporation, trademark registrations, all the ongoing administrative functions like accounting, tax, payroll, etc. If you haven't yet received it, and again, this is really specifically for those of you that are newcomers, get your free copy of our ebook, The 10 Biggest Mistakes Companies Make in China. Send an email to me, Christina@woodburnglobal.com, and I will give you a free copy of that. So let's get cracking. We are now at round table 26. Today's topic is about how to avoid a tax audit in China. And I kind of want to start off with a little bit of a disclaimer today. I want people to remember that tax audits can also be random. So even if you follow all the rules that I'm going to highlight today, there's no guaranteed way to completely avoid the possibility of an audit. And I have firsthand experience in this myself. My company did go through a tax audit, even though we had followed all the rules, all the requirements, etc. We had actually gone through a tax audit that lasted 3 months. So the goal of today, though, is that I want to highlight scenarios where tax audits can pop up. I want you all to avoid getting into those scenarios as much as you possibly can. And we're going to finish off today with ways that you can minimize the risks and ensure that you are prepared if an audit actually does occur. Okay? And these tips are things that I wish I would have known about back in the day, because it certainly would have reduced the length of time of our tax audit, which did last about 3 months. So let's kick off today's roundtable. Now, let's face it, receiving a visit from the tax authorities is never a pleasant surprise. Even the most well-intentioned and honest businesses, we're included, can get penalized for unqualified fapiaos, missing supporting documents, simple mistakes made by employees. Remember, your employees are human. There is always going to be some form of human error that occurs, not just in the finance department, but between the various departments that you may have in terms of communication, misunderstanding, etc. Now, I'm going to repeat this many times. Obviously, the best way to avoid these tax risks is to maintain a complete and accurate set of books. Now, I emphasize this because the tendency in China is that, especially in the entrepreneurial realm, is that people come into China and either their Chinese wife or their Chinese husband will suddenly say, I can do accounting, and they do it in Excel. Or they will go with extremely cheap service providers, which on one hand, I agree, we want to save on budget, but on the other hand, you have zero communication with them. You don't actually really understand how they're doing their bookkeeping. All the way to even well-established companies who still outsource, but have found that the people that they're working with from these outsourced firms, there's just no relationship. And again, they're not getting the right information. So understand who you're collaborating with, understanding these relationships, invest a little bit of time and money into making sure that we can avoid as much as possible getting these rather unpleasant visits and random visits from the tax authorities. Now, the reality in China is that most businesses contain many of these hidden tax risks caused by negligence or simply by the poor quality of the accounting that is happening. Now, a poorly kept set of books not only creates additional tax liabilities for the business if audited, but also makes the responding tax officers request for additional documentation, additional information, which is time consuming for the business. And this is what occurred to us. We needed to gather all the data. We were not fully organized and ready for that tax audit. Another downside to these visits is that companies can also see that their credit level decreases from A to B or even from C to D, which can cause devastating consequences and limitations on future business opportunities, particularly if you're bidding for projects, and especially if you're bidding for state-owned projects, right? So we want to create, obviously, ways to minimize the risks of having a tax audit, but also realizing that if a tax audit occurs, you're completely organized administratively. So what can trigger a tax audit in China? So I want to talk about 4 different scenarios that could cause the tax bureaus to come in and investigate your organization. Now, the first one, you have no choice around it, all right? If you are planning on exiting the Chinese market and you need to liquidate your Chinese company, then it is a requirement that a tax audit occurs, okay? But it just means that you are going through the legitimate process to liquidate your company. The purpose of deregistering your company is to make sure that your shareholder has no more relationships with the Ministry of Commerce or any other government bureau. You are actually shutting down your business, shutting down your bank account, okay? The process of the tax audit is ultimately that the tax officers are going to do an investigation in the last 3 years of operation to understand whether you have any tax liabilities whatsoever. And obviously, the main tax liability they're going to be looking at is whether you have any corporate income tax, profits tax outstanding liabilities. But in addition to that, they're going to be looking at value-added tax. They're going to be looking at consumption tax. They're going to be looking at all the taxes that your business would be liable for. They'll also be looking at individual income tax. Has that been properly declared and paid? We are currently going through a liquidation of a company that we were maintaining from an accounting perspective. However, in the 2 areas that the company decided to in-house, which was payroll calculations and also VAT refund applications, these are now the 2 areas that we are struggling with for the liquidation process. In terms of the payroll, the Tax Bureau has gone in depth. This was a manufacturing facility. The manufacturing facility has closed down. And as a consequence, they're looking at all of the employees, that includes the production workers, etc. And they are going step by step to analyze that all the salaries have been properly declared, social insurance has been paid, and individual income tax has been settled. In the case of this client, there is 1 employee who denounced the company. saying that their individual income tax was not properly settled based on the termination compensation that was owed to them. And with this one denouncement, all the others fell in. And basically the internal staff who was in charge of making all of these calculations made a human error, and taxes had to be adjusted and properly declared. In terms of the VAT refund, this is now extremely complicated because there are 70 items that have been declared to have been exported, and there is no VAT refund record. And the Tax Bureau is asking, why has no application been done for those 70 items? You've declared every other item, you've applied for VAT refund for every other export. Why for these 70 items is there? And basically, the issue is we cannot find documents, we cannot find records in the customs department, in the we can find the records of the export, but not of the VAT calculations. So it's gotten to be a little bit complicated, and we're trying to figure out solutions with the tax officers to settle this. But it just shows you need to keep an accurate set of books. All right. And I also hope it shows that if you are bringing everything in-house into your organization from an administrative perspective, make sure those individuals are handling the liquidation of the company. So retain them as advisors or consultants until the liquidation is completed, or alternatively, give everything to the outsourced provider so that they have the full history of the transactions and the books. Otherwise, honestly, it gets into chaos in terms of who has done what. And we're going through that right now. So as you can see, the tax authorities are going to look through everything with a fine-tooth comb, see whether you have any tax liabilities, see whether you have any fines and penalties that have to be paid. This process alone, just the tax deregistration, can take up to a year, including the audit process and the back and forth questions that are occurring. Scenario number 2 is getting reported to the tax authorities. Okay. Now, we know in China about guanxi, we know in China about developing solid relationships with all parties within our ecosystem. That includes employees, suppliers, customers, etc. But I also want you to realize that obviously relationships can go sour, and one bad relationship could potentially damage your business. There have been cases where people who've lost face have reported companies to various government authorities. And the issue is that as soon as you are reported to a government authority like a tax bureau, without substantiated cause or not, the tax bureau must do an audit on you. It is part of their job description. If somebody is denouncing you, they have to take action on that with or without substantiated cause. All right. So I want people to realize relationships are vital. Maintaining those relationships are vital. This is not just a bad review on a social media platform. This is getting denounced to a government authority in relation to your organization. Okay. And you might still be running that organization. Okay. So obviously we want to try and avoid these types of scenarios. Okay. We want to avoid getting vampire partners, vampire employees, shareholders, clients, whatever it might be. Okay. This is something that we need to try and avoid. So please make sure that you have your contracts up to speed. Make sure that before you terminate a relationship with anybody, whether this is employees, suppliers, customers, you have a lawyer review those contracts so that you know what the potential risks are, and also what leverage that partner employee might have over you. What information do they know about you? And this is also why I say, generally speaking, in startup phases of foreign invested companies in China, you might be doing certain things not by the books. Whoever you've employed in that time frame knows that, right? They're going to be privy to it. So that is leverage that they hold over you, that they can use with any government authority. So be very wary of that. There are bad people in this world, and they can use that information against you at any point in time. So I do this a lot, not necessarily, I mean, I'll use employees as an example, but I use employees, if I'm going to terminate a relationship with an employee, the higher they are up in our hierarchy, I advise with my right-hand person, I advise with a lawyer to make sure that I'm doing everything above board, that I know the terms and conditions, and that I'm also privy with my right-hand person who's managing the individual. What information do they know or don't they know, or that they could use against us? Okay. Clients. I'm actually doing this right now. I'm terminating an agreement with a client. I've just done a complete review of our service agreement to understand what I can and cannot do in that termination. I understand they might give me a very bad review because I'm actually terminating with them, but I need to for the health of my business. But I am dotting the I's, crossing the T's to make sure that once I do that termination, I know exactly what I'm stepping into. Consulting with my lawyer in regards to this, because you might get media issues. That's a PR crisis. But what we don't want is to have auditors come in from the government to investigate what's going on with our organization. Now, in order to avoid people denouncing you, it's really important to, first of all, understand your company culture, understand what information your employees know about your organization, and do they have proof? And most importantly, advise your team of unsuccessful client relationships or unsuccessful supplier relationships or unsuccessful third-party relationships, right? If you're using media agencies, logistics providers, and that relationship is going sour, right? You need to instill the right policies within your organization, the right standard operating guidelines, that if you need to terminate, there has to be approval. Somebody has to investigate the contracts, verify everything. Don't rush into these situations. It can only backfire on you. So the tip here is really advise with a lawyer and get clear on the operational guidelines. Now, I do want to highlight on a case study here. This denouncement was not made to the Tax Bureau. It was actually made to the Ministry of Commerce, but it had a, a waterfall effect, which led into the different government bureaus. I had a client in Shenzhen. They were a simple assembly company, which is permitted under a trading license. However, without informing me, they started doing a higher grade assembly, which actually changed the HS code of the products, which meant that they became actually more than just assembly. They were actually more of a production company at this point. They had forgotten that they had to update their business license, and of course their employees, who know fully well what is in their business license because you have to hang that up in your office wall. They fired somebody who completely lost face and actually went maniac. They even stabbed another employee with a pen in the hand. Police were called in. The employee, I mean, there was a court case in terms of the police and the attack, but separate from that, this disgruntled employee also denounced the company to the Ministry of Commerce in relation to the business scope. Now, the repercussion of this was very simple. The Ministry of Commerce said you have 60 working days to update your business license to make sure that everything is included within your business scope. This is why I drain on constantly about making sure the foundation of your business is always solid, so you don't have this as a leverage point for your employees. Make sure you always are reviewing your business scopes so that nobody can go against you in this regard, and you're always updating yourself. But in this period of the 60 days, the waterfall effect was that, one, the Ministry of Commerce said, okay, you've got 60 days to update it. We're fine if you update it. You've got a time limit, otherwise penalties and fines will arise. But this news traveled down because in the Ministry of Commerce's system, it showed that the standing, we call it good standing. The company was no longer in good standing. It had a red flag associated with the name, And that was filtered down to the tax bureaus, to the State Administration of Foreign Exchange, to the bank, who then also came in to investigate what was going on with the company. So it just had a waterfall effect in that regard. So it's just to highlight, disgruntled employees, they can go, your neighbor in your office building can denounce you. You might not even have a business relationship with them. Anybody can denounce you. But once there's that denouncement, an investigation has to occur. Now, the third scenario that I want to highlight is applying for a tax refund. Now, you might think that this is just a standard operating procedure. If we are exporting goods from China, we do the application for a tax refund. If we have paid too much tax, we do the annual profits tax filing, and it might very well be that we have paid too much tax in that year. So we either ask for a refund or we get a credit notice. If I were you, I would go for the credit notice, try to limit the applications for the refund. The reason why I say that is because with tax refunds, you have higher chances of the tax bureaus coming in and doing audits. A couple of questions I want to highlight to you here is when you are asking for the refund, why are you applying for it? Why are you not okay getting the tax credit? Have you paid too much VAT? Have you paid too much income tax? Why has that occurred? It happens. So I want to tell people it does happen. Just do you understand why it happened? Okay. A lot of people sometimes don't understand why. It could very well be for the corporate income tax that in one quarter period, you earned all of your revenue for that year. And you realize that it hasn't been spread out of the whole 12 months, and hence you have a refund to pay. So as long as you know why this is happening, I want everybody to understand that they have to know why things are happening and why you're applying for the tax refunds. Now, applying, like I mentioned earlier, tax refund applications, not as straightforward as you might think. Okay. Again, tip, try and go for the credit if you can versus getting an actual refund into your bank account. The tax bureaus, I'm going to use a specific case study if that's okay with you. So we have a client in Shanghai that is based in Fengshan district. Fengshan is a district that is a little bit on the outskirts of the Shanghai CBD area. And it is a district where the tax authorities are not really familiar with foreign investors because historically, not very many foreign investors were established there. So they're more familiar with domestically owned Chinese businesses, and they don't necessarily realize the slight differences that occur with foreign invested companies. With my specific client who's in the F&B sector, they asked for a, I believe it was a VAT refund, and their tax officer got a little bit taken aback. And as a result, she started investigating the company. And in this scenario, she went in depth. It was as if she had done an investigation like you do when you liquidate a company. So I highlighted it to you earlier about the liquidation process and that they do a review of the last 3 years of operation. She did a review since the date of establishment. So that wasn't 3 years, it was around 2.5 years, but she did a full investigation. And certain things popped up within the work. Now, again, this is what difficulties arise. Our client used another service provider when they were establishing their company. They then switched to us as they started growing and scaling in the market. We did not have a lot of the history of what had happened earlier. As a result, things started, basically it was opening a can of worms, and things started coming out that not the right individual income tax had been declared. Why was no profits declaration done when there was, it's clear to see that there was a fapiao for a fapiao issued to a customer. There was a lot of things that started coming out of the woodwork. And of course, it takes a lot of time. When these things start coming out, you have to answer your tax officer about the questions that are being raised, and you can't just ignore them, okay? Because they can block your company, meaning you might not be able to issue fapiaos, you might not be able to continue with the running of your organization. So again, something to keep in mind when you're applying for tax refunds. Is it a necessity? Why you're doing it? Do you realize you could ask for just a simple tax credit? Is it really necessary to open up that can of worms? Now, a tip that I want to offer you guys is do proper tax planning and financial controlling. Make sure that your accountants are reviewing your business quarter to quarter when profits tax is declared quarter to quarter. Make sure that you are looking at why you're accruing certain things or why you're pushing things to further dates, why fapiaos are not issued in one quarter, but they're going to be issued in the next quarter. These are all things that could happen in order to minimize your tax liabilities. But overall in the year, you're going to declare everything properly. It's just really for a cash flow perspective that you are controlling what is going on. You can see there's a lot of elements that you have to think about in terms of cash flow, in terms of understanding how you're booking items from one quarter to the next quarter. The clear thing is that you want to have a projection over your fiscal year and make sure that you're not overpaying too much in taxes. We don't want, again, to ask for refunds. We want to minimize this, okay? Now, just to highlight a little bit here, suspicious signs. I think I have missed, no. So this is now scenario number 4. So scenario number 4. So let me rephrase and go back a little bit. The first 3 scenarios: liquidating your company in China, tax refund applications, and the other one is getting denounced to the tax authorities. The 4th one is suspicious signs in your financial management reports. Okay. Now, how do the tax bureaus find these suspicious signs? Okay. And how do they find this throughout the course of the running of your business? So in China, you've got the golden tax system, which is really fapiao related, and there's this big data system, right? Now, the Chinese tax authorities can systematically and efficiently spot any potential fraudulent behavior, and that is particularly happening in the cities where now you're doing all your online declarations and your online filings. Okay, now what they're going to look at are your tax reports, your financial reports, fapiao information, both fapiaos received, fapiaos issued. They're going to look at the social security filings of your employees. They're going to look at customs clearance or customs export. They're also going to look at your business registration and any other licenses that you might have pertaining to your business. So do you have an additional F&B license? Do you have an additional accounting license? What other licenses do you have? Okay, so basically, if the system recognizes a mismatch, I'm going to use the example now of salaries. If the tax bureau system recognizes a mismatch of gross salary between individual income tax declaration reports and corporate income tax declaration reports, this automatically creates an alert within the tax bureau system, and tax authorities or your tax officer will get notified and will begin to investigate. So systems are synced, particularly in those cities where you have online declarations, okay? Repeated and or consistent abnormalities in financial figures will also increasingly attract the attention of your tax officer. Your business will likely need to produce supporting documents in relation to the transactions that are occurring within your organization, okay? Now, 4 areas that the tax bureaus start investigating or benchmarking your business with other businesses in the same industry and sector is that they reconcile data, they compare data, they do ratio analyses, and they also verify. So I'm going to give you a couple of examples on this. In terms of reconciliation, let's look at revenue. Many businesses, and I highlighted this as an example, many businesses like to postpone recognizing their revenue until a later date, thereby, one, delaying VAT, but two, also delaying the quarterly profits tax payments. Now, sometimes they do this without realizing that they are exceeding the legal limit for accruing their revenue. Remember, in China, we are looking at a fapiao accounting system, not an accrual accounting system. You can accrue in China, but be careful. If you accrue constantly, this is also a red flag with the tax authorities. So through the new e-tax system, e-fapiao system, the tax authorities know exactly when you're booking the fapiaos, giving a clear indication of how much revenue your business should be reported within a given period. Okay, so be very, very weary on that. They're going to reconcile the data. The second one is comparisons. Okay, now the tax authorities are monitoring not only the value of the fapiaos issued, but also the number of fapiaos that are being issued. So even with e-fapiaos, they're looking at the quantity of e-fapiaos that are issued, and there is a threshold limit in terms of the value of e-fapiaos that you can issue per month. For example, I have at Woodburn, our limit is 700,000 RMB per month. We can issue as many e-fapiaos as we like, but our threshold is we can only issue 700,000 RMB, which means that our revenue can only hit 700,000 RMB. Now, VAT fapiaos are closely controlled, right? With only a threshold by default being given to each business. An increase of over 30% between periods is very likely to result in an inquiry from your tax authorities asking for that increase. That inquiry can also come from you constantly asking to issue more fapiaos. Documents that they're going to ask for is contracts. They're going to ask for contracts not only signed, but contracts that are being fulfilled, right? Purchase orders, etc. So they're going to ask for this type of documentation. Now, why do I get a limit of 700,000? I get a limit of 700,000 because of the industry that I am in. Maybe some of you aren't aware of that. I am in the corporate services sector, and if you look at most law firms, accounting firms, administrative professional service firms, they will have a limit of up to 700,000. If you look at other trading companies, depending again on the industry and sector, they might raise that to 1 million because they're benchmarking your industry. Okay. If you are looking at verification, right, this is now also becoming a common tool to crack down on fraudulent behavior in China. Basically, the verification is verifying all the e-fapiaos that you are receiving from your suppliers or the paper fapiaos. Are they authentic? Are they real? And do they truly pertain to your business? They're looking at the fapiaos that you are issuing. They're verifying the social insurance calculations, individual income tax calculations that are being paid. They're verifying data with the banks. They're verifying data with the State Administration of Foreign Exchange. So they are synchronizing the data together with other government bureaus as well. Okay, I didn't touch on the ratio analysis, but just to highlight, the ratio analysis is the benchmarking that they are doing compared to businesses in the same industry, in the same sector. All right, now to survive in China, which sounds very drastic and dramatic, is you need to think seriously about the quality of your accounting practices. I'm not talking about just bookkeeping. I'm talking about the quality of your standard operating procedures associated with your finance team. How is the communication between the various departments and your team? Is everybody talking? Does your balance sheet truly reflect the financial position of your company? Do you have all the supporting information and data associated with your transactions? Do you have a complete and accurate set of books? Okay. Now, the case study I want to highlight is myself. Okay. We are a Shanghai accounting and corporate services firm. We were asked to go through a tax audit. Why? Because our company looked too successful compared to other companies in our industry and sector. Now, you would think that that's a positive, that we're successful, but that was the reason. They came because we were doing better than most other companies in our industry and sector, and they did a ratio analysis and benchmarking with our organization to understand why we were doing better. Now, the outcome of this audit meant that it took 3 months. So I just want to highlight, we did nothing wrong, right? We weren't liquidating our company. We were submitting our financial reports on time. We weren't missing any deadlines. Nobody had denounced us. We had checked. Nobody had denounced us. We were doing everything above board, all right? But the issue was our results were showing that we were doing better than other people in the industries. And you might also be thinking, because this is what I was thinking, well, if we're doing better, it means we're also paying more taxes. Shouldn't you be happy about this? But I think they wanted to investigate us to understand why the other companies in our industry and sector in Shanghai were not doing as good. So obviously, one of the things that they looked at was our profit margins. They were also looking at our operating procedures, how we were acquiring clients, how we were retaining clients, what was the length of period that our clients were staying with us, and ultimately, what was our billing mechanism. Now, unfortunately, we actually did not have an operational guideline of how we acquired clients, how we retained clients, and what our billing mechanism was. Of course, we had a fee structure, but we were not outlining anywhere that our billing was monthly or, or anything like that. So one of the outcomes of this audit was that we had to submit an operational guideline to highlight all of these various aspects in relation to our business. And perhaps that also outlines why I, on last week's roundtable, was highlighting internal control processes, implementing system operating guidelines so that you are prepared if an audit comes, not just from the taxpayers, but also from the Ministry of Commerce's, okay? So I want to finish off today's presentation with an action plan, okay? I want to highlight here, not just that you need to keep a complete and accurate set of books, but that you should also be creating ways to minimize the risk if an audit actually occurs within your organization, okay? Now, the questions or tips that I'm providing is your checklist, all right? What I want people to take away from today's roundtable is go back to your finance team in China as a first step, whether they're internal or external providers, whether they're your in-house finance team or your external accounting outsourced providers, and understand what your current financial status and operating system looks like. So do your own due diligence, right? Ask these questions and tips that I'm offering you today. The first one is, are you fully compliant with all Chinese tax regulations? Ask your finance team this. Are we fully compliant? Is there anywhere that I need to understand if there's a risk? Now, again, I'm saying, ask your team first. The second is, are you aware whether you have received advice from professional tax advisors or not? What advice have you been given? Have you executed on that advice? Okay, if not, perhaps this is something you should be thinking about, just to have that external help. The third is, have you maintained meticulous and accurate financial records? And not just that, do you know where they are? Do you know what it looks like? Have you gone through the books to understand the vouchering system? Can you look at the files and say, okay, this is March 2023, this is April 2023, this is May 2023. Have you looked in your finance department to see that you have original documents? Have you been able to look and see that you have contracts? And do you have a track record of the signing of these contracts? Are there renewal dates in place? This is your own due diligence, okay? I just did this exercise myself last week. I went through my entire service agreement list and discovered that we had dropped the ball And we have about 5, if not 6, service agreements that are still outstanding, not signed by our clients. And we've been working with them for quite a few months. So, you know, I admit it myself. We've dropped the ball. I did a review last week. This is now my conclusion. And now I have to get back on the ball and make sure that all the service agreements are up to date. If you're looking at employment contracts and you don't have open-ended agreements, do you have dates in your calendar where you understand where probation periods are, where probation ends, where renewals have to occur? Are you doing those renewals? We had one client last year who totally forgot to do the renewals of 2 employees. Do you know what happened? For the period of time that the new contract was not signed, they had to pay double salary. All right. What did that cause? It caused an audit by the Labor Bureau to see if everything else was kosher. Have you ensured timely tax filings? Have you created a schedule to meet all filing deadlines? Filing deadlines are how do you say, are broadcasted? I don't know, are issued and announced by the tax bureaus at the end of each year for the beginning of the new fiscal year. So you should easily be able to schedule in your calendars when tax deadlines are, right? One exercise we just did with all of our clients was to understand, based on this October national holiday, do you want your financial management reports submitted prior to the holiday or after the holiday, knowing that the tax deadline is the 23rd of October? Okay, this is communication that has to happen. Have you been as transparent in your financial reporting as possible? Meaning, are you aware if you've been underreporting income? Are you aware if you've been inflating expenses? Because obviously these are certain things that can raise suspicion with the tax authorities if you're doing this quite often. Another is be cautious with complex and high-risk financial transactions. By this, I mean, if you have transactions, I'll use another case study, that are related to sisterly transactions, so within the group, have you, and the value is large, have you investigated that, right? Have you thought about the pros and cons of doing such a large transaction? Do you understand what's going to happen at the tax bureau? Do you understand what's going to happen at the bank? Do you understand the amount of time it's going to take that they're going to investigate the agreements and the supporting documentation related to these high-risk financial transactions? The next is familiarizing yourself with allowance deductions and tax credits, not tax refunds, tax credits. Are you aware what deductions you get, what you as a company fit in terms of criteria and whatnot? The next is transfer pricing compliance. So if your business is involved in international transactions within a corporate group, do you have transfer pricing policies implemented so you understand what margins are being created with these transactions? The next is just staying up to date and staying informed with the various changes in the tax laws. Do you have a mechanism in place, like, I don't know, joining these roundtables where you get up-to-date information? The next is obvious, or alternatively, does your finance team get updates? Are they subscribed with their tax officers or with the tax bureau's website that produces the updates daily? Are they logged into that, right? Are they looking at it? Are you engaged in proactive tax planning? Now, doing proactive tax planning optimizes your tax liability. And again, this leads on to, do you have an external tax advisor who's coming in, providing you with tax saving strategies that can align with the various Chinese tax laws? And the next one is preemptively doing voluntary tax audits. So something that we offer as a service to clients is we do internal audits, and we can look at a variety of different aspects of your business from a finance and corporate administrative perspective. So one of the things that you might want to do is just do a tax audit by an external provider that can identify, maybe rectify any potential risks or red flags that they see. It's having fresh eyes on your organization and doing that before the tax authorities come in. The next is obviously ensuring that all financial documentation is properly organized, stored, easily accessible in case of an audit. Financial documents need to stay within your organization for a minimum of 5 years. So if you look at your fiscal year 2023, you add 5 years to that. You cannot get rid of anything prior to January 2029. Must always be kept in your office. Do you have an organization system in place that if the tax bureau comes, investigates, or any bureau comes, investigates, you can take documents out and you know where they are? If you suspect of any potential tax issues or unsure about your tax compliance, know that there are tax advisors out there that can support you, right? You don't always have to rely on your in-house team, especially if they are the ones that are giving you the doubt of having potential tax issues. The next is maintaining transparent corporate governance practices. So meaning creating these standard operating guidelines between your various departments, from marketing and sales, like client acquisition, all the way through to delivering of service, all the way through to billing and all those aspects, right? The next is obviously making sure that your corporate standing is good within the Ministry of Commerce. Do checks to see that within the Ministry, you just have to type in your Chinese company name and address on the Ministry of Commerce's website, and you have all of this data. Check that, at least in their records, everything is kosher, above board, and you're in good standing. And last but not least, try to create a consistent transactional flow. By that, I mean, avoid any sudden or significant changes within your financial reporting or within your transactional flow. Meaning, usually transactions are standardized. You buy, you sell, you have third-party providers. If suddenly things are changing or the volume of the business is changing very suddenly, and there's significant changes, this will raise red flags with the tax authorities as well, where they will ask you questions in relation to this. That is the end of today's presentation. I hope you guys have gotten takeaways from this, and obviously I would love to hear what your biggest takeaway from today was. So those of you that are watching now live, if you want to add that in the chat box, let me know. For those that are going to be watching this on replay, again, let me know. This always helps me to structure these types of presentations for next year in terms of adding information, etc. Next, do you need to execute this action plan to avoid a tax audit in China? If you do, we can help you with this. Once the recording is up on our YouTube channel, I'll be providing you with a link, but I'll also be providing you with our link to our diary where you can set up a call with us to see if we can be of assistance and see whether we can help you in executing these action plans. Again, if you haven't yet and you have WeChat, join our Thrive in China WeChat group. You can connect with me. My ID is KNCOLUCCIA. Connect with me on WeChat. I'll send you the invite to the group. Unfortunately, I cannot provide the QR code for the group because we've exceeded our numbers, and so it has to come through individual invitations. But do join, and it's an avenue for you to meet other business people that are doing business in China. Ask your questions. The other day, we had somebody asking whether there was a patent lawyer available, and there was. So it's just resources available to you in case you need it. I don't offer every single service out there, so it's nice to have my partners and as well as other people raise questions and share their experiences. Next week's roundtable is on how to review your China business performance. Please do stay tuned for that. Again, it's the same link. It comes on every Wednesday at 1 p.m. Central European time. If there are no questions, I'm going to leave you there. Elliot, thank you so much for joining. Happy to hear that you benefited from it. I hope you all have a fantastic Golden Week holiday. Enjoy the break, and we will see you next week. Take care and goodbye.